Hi everyone, 13th of September, it's a Wednesday, 21 minutes past 1 p.m. in Australia. Here's my latest video blog. A couple of things we're going to just talk about all this drama in the Bitcoin markets at the moment. It's not really drama, but I'm just going to run through a couple of things that I've come across. Also a couple of articles, one from Jamie Dimon from, I think it was JP Morgan. I'm going to just read that out. I think it's quite interesting to see what the big banker boys think of Bitcoin and how they're creating FUD and a little bit of they're just playing the game. And anyone that can look through and look past the fundamentals of their intent in regards to, I suppose, negative media, I think you'll see that there's a different agenda, and that's got to do with it. Also connected to all this Chinese stuff. There's a lot of gamemanship in regards to the entire stock market or the cryptocurrency market or the financial markets. It's all based on perceived emotional ebbs and flows. Sometimes, and I'm strongly starting to see past it. I think a lot of it is manufactured. They'll create events where there's a perceived crash which is associated to this particular event, but really when you understand how the big boys have got so much influence on these markets, they almost need these media outlets to release relevant news for the reason or the purpose of them actually extracting the funds, because the amount of money that they extract is huge. The influence it has on this markets, especially like crypto, because it's so small, is massive. You go and move $10 billion in a short period of time. It's going to make a major influence on the markets, and they need to have something to back that up, especially if they're looking to support this into the future. Otherwise, if they weren't doing that, you probably look at it as a bit more of a scam and a bit of a money grab, and if they don't really care about where it's going, they wouldn't need this information released to the general public. It's a bit of a game, and you've just got to look through it. But the first thing is, the last 7 days have been a bit of a whitewash, a bit of a letdown. But it's all healthy. You need this. You need to see the prices going backwards. You need to see it going into the red. What it does is just alleviates the pressure of all the influx of capital that's occurring in this new market. And this is one of your first videos that you watched of mine. I mean, I have talked about S-curves and understanding it's a new technology, and whether it's the invention of the TV or the implementation of electricity into society, or when the first mobile phones came out, or the dot-com bubble, they're all have these periods of time, and I call them S-curves, from early adoption through to major mass adoption, and they have different stages that it goes through, and sometimes different periods of time. I think electricity took about 30 years to really sort of grab on, and a lot of that would have been because of just the time that it was introduced and infrastructure and things like that. These days we move a lot more efficiently because we've got technology, and media and social media can share information very, very rapidly. Where am I going with that? But what I wanted to do was, I've just got some tabs open, so I'm just going to flick these. So, breaking, this is from the September the 8th. Now, it's still relevant in the sense that, it's the 13th of September today, 5 days on. What we've seen is a couple of dips in the Bitcoin price market based on a couple of rumours. And it's not just rumours. China did come out and say they were going to crack down on ICOs. Reason being is that they want to implement some infrastructure and some legislation that's going to protect Chinese best interests, I suppose. That's the way you've got to look at it. If you're not protecting your own ecosystems or the financial markets, then you probably, it's due diligence by them. However, I'd like to see us remove our need for governmental interruption and create our own decentralised governing bodies or regulating bodies. But what did happen is that apparently there was a big dump. Now, when I say dump, $200, I think 5% off Bitcoin instantaneously within an hour. That's sort of how it looks. And if I've got a chart here, let me just have a look. What have I got here? This is the global charts. Now it's only this little bit, this tiny little thing just here. You know, this is what's got everyone talking about. This is the first ICO ban, or the talk about. Oh, my microphone's going down here. It's got to behave itself. There we go. Tighten that up. But this is the first initial. China's going to ban ICOs and Bitcoin and all sorts of things. But from that, we saw a little bit of uncertainty over the last week. You know, it's been, well, 5 days. And then there was this Twitter response from, I think it was Charlie Lee from LITECOIN. Now, I did grab a couple of screenshots, and apparently it was just a joke. He was essentially confirming that China was going to ban Bitcoin and ICO, and then he's retracted. He's actually just shut his Twitter down for 3 days because he was just absolutely copped it from the market because people just didn't appreciate that. It's from someone who's got a lot of influence, and I think, yeah, look, I think you've got to be careful in these days where people are idolising or they're following major parties on social media, and they go out and throw a Twitter out like that, saying that, confirming that, you know, China's going to ban Bitcoin, and all of a sudden Bitcoin, or $10 billion is moved from the market. Whether it was an inside trading slip up or whether it was nothing in it, who knows? We take things on face value, and we just don't know. I think the big thing is it just washes over and we move on. But what I did get, and I've got this, and I just found this in a particular group. Now, fundamentally, if the government decides to legalise and regulate the ICO market, its licensing program would probably be structured similarly to the BitLicense program of New York State Department of Financial Services. BitLicense requires companies to obtain a license from the state in order to operate and serve people of New York. Now, I assume that's on the premise that China does not have anything in place for these ICOs, and there's all these people and entities creating ICOs out of nowhere, and there's nothing regulating it. So, you know, when you look at this, I think, well, that's a good thing. And it might take 2 or 3 months for the legislation to, you know, be written up and to be released and go through the right channels and all of that type of stuff. So it could be even, you know, January 2008 or 18 or something like that. Who knows? I'm speculating, but these things do take time. Another little insert, there is a rumour China will create a coin similar to the USDT Tether. China will ban Bitcoin trading in Chinese yuan or the USD, but will allow Bitcoin trading with this coin made by the Bank of China. Again, regulations seem bad in the short term. However, in the long term, this will contribute to the further growth of the cryptocurrency market, as this means governments are recognising cryptocurrencies. Now, we already know governments are recognising blockchain. It's happening. It's going to happen. I think alternative cryptocurrencies are here to stay. The decentralised ones are here to stay. Community-driven cryptos will have their place in a free market. The government can't shut down everything. And if there's no jurisdiction and there's no ownership of these decentralised cryptos, and it's owned by the community, you can't actually shut it down. You'd have to really go out of your way to shut it down, and, you know, I think the dynamics of doing something like that could cause more issues than allowing it to actually succeed. But what this leads to as well is that a lot of these governments around the world, it's likely, and the banks are going to want to get in on it. They're going to want to try to maintain control. So I'm not sure what the direction was. My initial thoughts, and this is going back 6 months ago, I thought it would go more of a corporate direction. It's like having cryptocurrencies for Shell oil, or you know, or JP Morgan comes out with their own, or whatever it is, or if you want to look at the ECB, whatever it is. I mean, Nike could come out with one. I'm not sure. I mean, that's going a bit left of field, but in regards to the financial markets, it could go. And if you look at what's already happening, a lot of these cryptocurrencies are sort of more brands rather than understood units of currency for an area or for a nation as such. You know, you've got your Moneros and your Verges and your PIVXs. They're more of a brand name, and I think that's the direction. Whether or not the banks will want to do that, I mean, what would the USA do? I mean, at some stage they're going to come forward with something. What's China going to do? What's Europe going to do? Are they going to replace the euro with a euro tether version? That's something that we're going to have to wait for. I do believe that that will take 2-3 years to actually manifest. So in the meantime, we've got this, as they say, the wild west of cryptocurrencies, and there's going to be a lot of money made, maybe lost. I think there's going to be a bit of a sort out of some of the shit coins are still going to be pumped. I'm watching it on Bitshares today. I have no interest in them, but some of them are making 100% in a day, but you've got to be in on that because it does retrace pretty much 100%, the leading corresponding week. So you've got to be very, very careful. But yeah, that was all I had on that. Future of nation-based currencies and or some banning or some transitions of how we trade Bitcoin, especially in China or in other countries, yet to be seen. So I'm just going to close that. Do I want to save that? No. Next thing is Jamie Dimon. Now, I actually found this quite entertaining. Now, Jamie Dimon is the CEO of Chase Bank and JP Morgan. I think he's connected. Anyway, I've got Chase Bank here. And he's called Bitcoin fraud. But obviously, he's got a conflict of interest. He's part of a banking cartel, and he doesn't want all of these funds. And I think he has to come out. I mean, some of it could be a personal opinion, and I think there's no doubt we've seen other CEOs of other banks actually change the way they perceive Bitcoin. Jamie's pretty much come out and compared it to the tulip mania of the 1630s. Now, what I'm going to do is I'm going to read this out a little bit, and I'll see how I'll go. I'll just flow with it. Bloomberg reports that Chase Bank CEO Jamie Dimon called Bitcoin a fraud at an investors meeting today. Dimon said that Bitcoin is worse than tulip bulbs and that he would fire any employee trading Bitcoin on the company's accounts. Tulip mania. Dimon's comparison refers to the Dutch tulip mania of the 1630s. During this time, Dutch traders began speculating on the price of tulips. Now, the thing is, I mean, Bitcoin and tulips are very, very different. There's a limitation on Bitcoin. It's obviously a currency and a digital and a speculative asset, whereas a flower is not. So I think it was a pretty stupid thing to say, really. He's just hyping and trying to connect it to something that had crashed quite horrendously in the past. And he's also talking about something that happened, how many years ago? It's almost 400 years ago. Now, the dot-com bubble. Many have argued that Bitcoin and the entire cryptocurrency sector are in the midst of a sizable bubble. Given Bitcoin's massive price increases over the past year, they may well be correct, even if Bitcoin is in the midst of a bubble. However, it would be more useful to compare it to the dot-com bubble rather than the tulip mania. The dot-com bubble was driven by excessive exuberance over the transformative power of the internet. Investors had the right general idea in betting on the internet, but got carried away when it comes to investing in companies with no revenue or business plan. Now, we've seen that with the ICOs, with the crypto assets. There has been quite a few companies that have come out with pretty much just a concept. Very dangerous territory to be in, because it's just dangerous, and I think people need to study and research and understand and learn what they're investing in before they invest, because we're not immune, just like the dot-com bubble, we're not immune to things not going our way. Now, despite temporary losses after the collapse of the dot-com bubble, investors who chose solid internet-based companies have done extremely well. Those who purchased sizable shares of such promising companies as Amazon, eBay, PayPal have netted investors sizable returns, even if they had invested at the height of the bubble, which is very notable. There's been a lot of growth since 2000 to 2017 for a lot of these companies. They're huge, and that's going to happen with cryptocurrencies or crypto assets. There's going to be certain ones that are providing certain services. Financial services in regards to financial instruments, cryptocurrencies like VERGE and PIVX and Dash and a couple of these others I think will do very well. I can't see Bitcoin not doing very well. It's there, it's got the community, it's got network strength, it's got very intelligent people behind it. So you can see more positives than inflated, colourful language. That's how I look at this. I see it as emotional language. It's trying to influence a particular niche. Now, whether it's just him coming out to protect his assets which is probably a very reasonable one. Now, it's very well known that these CEOs change their mind. They'll say something for the right reasons at the right time. And I think the big one is they don't want to hype Bitcoin or the cryptocurrencies to protect the current markets. Now, if all these big players came out and said, yep, we're ready, we're going, you're going to find this massive wave, a tsunami of income or capital come into the markets. What happens is other markets get crushed. There's going to be a massive disruption to an already failing system. And I think that some of these big boys, they've sat around the table and said, well, we're not ready yet. We need to just crush Bitcoin as best we can to maintain a percentage or to limit the transition from a percentage of people's portfolios, whether it's hedge funds or just disposable income, whatever it is, into cryptocurrencies. Now, just checking, Damon's criticisms. Damon doesn't really justify his critique of Bitcoin despite calling the currency a fraud and scam and suggesting that those who trade it are stupid. His remarks carry surprisingly little substance. Damon's only specific comment on Bitcoin was, someone's going to get killed and then the government's going to come down. I don't know how you're going to get killed from buying a Bitcoin. I'm not sure what that means. Again, it's another loose comment. And already, when you read this type of stuff, I just think he's a bit of a dickhead. I don't really talk about other people like that. I just think, sometimes you just think in silence. What are they trying to achieve by saying things like this? There's no doubt that the government wants to crack down on all of this. They want control and they want legislation and they want to tax everything. We've got to fight really hard to make sure that that doesn't happen. Decentralise, make government irrelevant. And that's what we need to, as a collective, keep talking about and keep ensuring that anyone that is involved in the area or the market is thinking like that. He also added, if you were in Venezuela or Ecuador or North Korea or a bunch of parts like that, or if you were a drug dealer, a murderer, stuff like that, you are better off doing it in Bitcoin than US dollars. So again, he's making Bitcoin out as if you've got to be an illegitimate person for a drug dealer or a murderer. Again, it's just a stupid thing to say. I really don't like these type of people. North Korea is what I call a sovereign state. When you want to call it a communist state, there's people who will argue with me, but I think it's all mainstream Western US agenda to try to bring down these sovereign states. We've seen it for the last 17 years. If you're blind, we've been attacking, well, I haven't been a part of it, but the US has been attacking all these other countries for 17 years. And it's going to continue. We've seen Venezuela is completely under stress. They've got a lot of oil. Sure, they've got socialist issues and all sorts of stuff, but you don't have to bring them out and sort of make out like you have to be illegitimate. There's nothing illegitimate about any human trying to do what they need to do for themselves to, but to better their lives. That's how I look at it. I don't need. That's why I keep talking about illegitimate governments and things like that. Just do what you need to do, and that means investing in Bitcoin or an alternative currency or whatever it is, then do it. Now, perhaps sorry, just going on my own little tangent there, but. Clear conflict of interest. Perhaps Damon's opinion of Bitcoin is tainted by his knowledge that it could one day put him out of work. Now, I think that's quite, this is a big threat to the banking system. And that's what we've got to remember. Bitcoin and other digital currencies may have many fascinating and complex features, but at their heart, they are basically a way of transferring money directly from one individual to another, or from a customer to a merchant. Bankers are the ultimate middlemen. Consider that banks allow for the convenient storage of savings. Without banks, consumers had to store currency under their mattress or buried in the yard, process instead of credit cards, etc., clear payments by checks. It is any surprise that Damon is opposed to a technology that would allow direct peer-to-peer payments without giving banks an opportunity to take their cut. That's the thing. They're not going to make money from Bitcoin or alternative currencies. So it's a threat to his bottom line. There is no way he's going to come out at this present time and say that he supports it. Bias. What bias? Damon is certainly a renowned expert in financial markets and is arguably one of the best banking CEOs in the world. It is understandable that Bloomberg would report on his opinions, but it is surprising that such a reputable and distinguished public publication failed to remark on Damon's obvious bias. The biggest irony of all is Damon reports that his daughter owns Bitcoins. So let that sink in for you. He's not going to disown his daughter, I'm sure. There's a lot of interesting stuff there. I thought that's why I wanted to share it with you. What else have I got? Nothing really. I was just checking across the top. I did look at this particular. What was I going to look at? Bitcoin. Let me just type it in. I did have it up, but I obviously closed the window. I was going to talk about the bubble actually. Now the perceived bubble. Now when you look at this, you could say it's a perceived bubble, no doubt. Look at this, a massive influx since, let's say, the start of 2017. But what people don't realise, and they're not taking into account, is what is causing the bubble, or what's causing the influx. Now I look at it as major capital interest, more mass adoption in the sense that there's more people who are aware of Bitcoin, so there's going to be more money. There's no doubt there's been lots of ICOs, lots more initiatives, a lot more new products and services and ideas. We've also seen a boom in mining, so there's a lot more, and even at a small scale. I'm not talking about the big mining pools or anything like that. We're talking about, you know, the small mining devices that people can put in their homes. We've seen, you know, there's been a massive influx. You've got millennials who are on social media talking about cryptocurrencies, and you know, I think there's a lot more disposable income coming into cryptocurrencies. So when you look at and understand S-curves of a new technology, is this a bubble or is this fairly organic, considering that when you have new techs, you're going to have these type of movements. Now they don't always retrace back, you know, to Fibonacci's 23% and that type of stuff. When you have mass hype, I think it can continue for a very, very extended period of time because more infrastructure is coming in, and I think that's what it's about. Because the infrastructure is there, it starts to maintain and create new perceived market values for these particular cryptos or coins or techs. So there's no doubt we could see another retracement, and I think we're already seeing it. I mean, they could continue for the next week or so, and I think there's certain coins that may pull back. I was even looking at Verge. It's had a really good month. There's no doubt it could come back to 130 sats, but you know, the speculation, I'm not too sure. You've got to look at the market as a whole. I just truly believe that I think based on the financial markets, what's due to happen in end of this year, 2018, I think we might see another couple of real big bump ups in this market. I really only see the bubble bursting later on, or maybe, you know, in a couple of years' time. But as the banks and as the regulations come out, and as the infrastructure is implemented even more so over the next 5 years, you know, it could just go times 10, times 100 by that point. We might see it get to $1 trillion market. So where's the bubble? I don't see a bubble. I see something new that's going to take over what we already understand as being the financial markets. So that's just my 10 cents. Appreciate anyone's thoughts on this and what you think of bubbles and all this type of stuff. Let me know in the comments. You can always jump on my Steem at Sebastian Jago, as I always say at the end of my videos. And yeah, thanks for listening. That's all I got for you today. I'll just keep my head down, keep looking for little bits and pieces to share with you. And yeah, thanks for listening, and tune in to my next video. Thanks, guys.